Hi, my name is Fred Fisher, and I'm an expert in professional liability and specialty lines. Thank you for clicking on this video because I think it's very important by today's standards. In 1994, I was a member of the Board of Trustees of the Professional Liability Underwriting Society. At the same time, I was also the Senior Technical Advisor for the Professional Liability Manuals published by the International Risk Management Institute. At that time, I was providing quarterly updates by way of articles to the International Risk Management Institute, and often with permission. And simultaneously, those articles were also published in the Professional Liability Underwriting Society, or PLUS, their monthly journal. In 1994, I published an article regarding the dangers of diminishing limit insurance policies. Almost all professional liability and specialty line policies, including director and officer liability policies, as well as employment practice liability policies, are all written by default on a diminishing limit basis. And in essence, what that means is for every dollar of allocated expense or defense costs, the limit of liability is reduced by a like amount. So in other words, if you spend $25,000 in defense costs on a policy with $1 million limit, you no longer have $1 million available to settle the case. You have $975,000. And that can prove quite problematic for both defense counsel and maybe even insurance brokers when a policy has diminishing limits. And those limits are constantly going down, and yet the exposure in the case is quite large. It is not uncommon for plaintiff counsel to often make policy limit demands almost at every major event, whether it's a settlement conference, a trial setting conference, etc., and they'll ask how much money is left on the policy and immediately issue a policy limit demand. Unfortunately, in too many instances, defense counsel have often show little sense of urgency with respect to that problem of a diminishing limit policy. And in one case in which I testified as an expert in the bad faith case against an insurance company, the amount of limits available prior to trial was literally $60,000 more than what defense counsel had estimated as being a high jury verdict potential. In other words, there was $600,000 in limits available, and the high jury verdict potential was $540,000. Well, you're not going to try that case for $60,000. And unfortunately, in that particular case, the verdict came in at well over $1 million. And as a result, all of a sudden, there's a sense of urgency of getting together with their insured and saying, gee, we're real sorry about this. We hope you were well aware of the fact that you have a diminishing limit policy, and so forth. Another danger with diminishing limit policies is often defense counsel may not even realize there's other claims that are reducing the limits in other jurisdictions where the defense counsel, say in Los Angeles, is unaware that there's other cases ongoing in other states or in other cities. This is a failure to communicate by the claim department, and again, could be evidence in a bad faith case. In addition, this isn't the only area in which limits can become a problem. It is not uncommon for, even in occurrence-based policies or policies that don't have diminishing limits, where there are too many claimants in a given case and insufficient limits. That too can erode limits and requires a lot of sense of urgency between the carrier, defense counsel, and the policyholder to see that things get resolved properly. In addition, there may be a claim against the policyholder's brokers for failure to advise or failure to recommend higher limits. In my opinion, these days, $1 million limit with a diminishing limit policy form is inadequate on its face. And I believe at all times there should be at least either a higher aggregate of $2 million or, whenever possible, to see whether or not the insurance company is willing to offer what's called defense in addition to limits, where an additional amount of money is allocated to defense costs in addition to liability before the liability limit starts getting reduced. These are important issues to look at, as well as to whether or not there may be liability of an insurance broker, especially those who hold themselves out as experts. As I mentioned, as you may have seen in my video regarding my background, I am available for free of charge to have a quick curbside opinion, and I'll even chat with as long as an hour at no charge if I can add value and assist counsel in providing the financial protections the policyholder and/or even the claimant may require. Thank you for looking, and look forward to hearing from you.